Ladies and gentlemen, welcome back to the channel. We have a lot to cover in this video. First and foremost, the Fed just dropped a bombshell. Fed Waller, in fact, says that we should begin the process of cutting rates. Let me tell you right now, I think the Fed realized, hey, we were a little bit too hawkish, or more hawkish than we wanted to be yesterday. So they sent Fed Waller out today to put it as an option to cut rates in July. Because before Fed Waller spoke today, there was like a 92% chance of no cut by July. And if we get another good inflation report, I think the Fed wants the optionality to cut in July. So I don't think it's by accident Waller came out today and said the crazy things that he said. Now, it sounds crazy versus what the Fed said just, on Wednesday. We also have some Robotaxi updates and some pretty big comments from Elon Musk. I will share with you option activity, what the shorts are doing today, all of that as well throughout this video. So ladies and gentlemen, hit that like button as well as subscribe to the channel if you have not done so already. Consider checking out the trading community as well. We have a very specific strategy that we are employing right now. We are finding the hidden gems in hot sectors. That could be energy, like batteries, energy storage. That can be AI, that could be gene editing, biopharmas. We're going out there and doing a lot of due diligence to sift through the bad companies to find the good companies that are being overlooked right now. We have a pretty incredible track record here in the past year in doing this. And I just bought a new one today that I'm pretty excited about. So if you guys want to come join that, check out the link down below in the description of this video. You'll get access to every time I make trades. I send out alerts. You can come join the conversation, come talk to me 24/7, anytime. So check that out if you guys have not done so already, and let's get started. So let's start with your Tesla stock news today. The Tesla Europe and Middle East X account has released a new video of FSD supervised being used in Berlin, Germany, which is pretty cool. Tesla partners with Electrify Expo to launch a full weekend EV test drives. And some pretty big news today as well. Tesla Shanghai signed a $557 million energy storage station deal. Tesla's first China grid-scale battery storage station using its Megapack batteries will be located in Shanghai. The deal, involving an investment of $557 million, was signed today on Friday. Tesla is reportedly set to open its first showrooms in India next month in July, kicking off formal operations in the world's third biggest automobile market. The first showroom will be in Mumbai, followed by one in New Delhi. Now, Tesla has given Sawyer Merritt permission to share the parameters of use for their Model Y Robotaxi service starting this Sunday, June 22nd in Austin, Texas. The early access phase is invitation only. Here are the parameters of use. You must read through and agree to the attached terms of service, rider rules, Robotaxi, rider privacy notice, and service animal policy. You must have a credit/debit card on file. You may request a ride in the app to and from anywhere in the geo-fenced area, excluding any airports, between 6 a.m. and 12 a.m. midnight every day of the week. These operational hours are subject to change. And the map of the geofenced area is available in the app. So the operational hours, almost 24/7, but looks like you're going to get about 18 hours a day or so, where these Robotaxi rides will actually be available. It says, note that service may be limited or unavailable in the event of inclement weather. It says only the invitee may download and use the Robotaxi app to hail a Robotaxi ride. It says please be courteous and treat the service with respect. Your participation in this early access program may be terminated terminated for various reasons, including violating these parameters or engaging in unsafe and or disrespectful behavior. Provide a star rating and feedback from your experience in the app, and photos and video of the experience are okay. And this is pretty cool because this is essentially Tesla confirming that they are good to go this Sunday in launching the Robotaxi service. There was some speculation that maybe we would see this get delayed because there is a new set of essentially rules coming out for Texas AVs, autonomous vehicles, on September 1st. And there was some speculation that Tesla may just wait to launch the service until those new rules are finalized on September 1st. They didn't have to wait, but there was some speculation that they would. And apparently they're not. Apparently they are going to continue as planned, launching Robotaxi this Sunday, June 22nd. Now, this was pretty big as well. It says Elon Musk says, quote, Tesla works closely with XAI. You've seen how many humanoid robot startups there are. Part of what I've been fighting and what has slowed me down a little is that I don't want to make Terminator real. Until recent years, I've been dragging my feet on AI and humanoid robotics. Then I sort of came to the realization that it's happening whether I do it or not. So you can either be a speculator or a participant. I'd rather be a participant. Now it's pedal to the metal on humanoid robots and digital superintelligence. And Elon Musk's XAI is about to bring online another 110,000 NVIDIA GB200 GPUs in Memphis, Tennessee, bringing XAI's total GPU count for AI training to 340,000 GPUs, the largest supercomputer in the world, which is crazy. GPU count, 150,000 H100s, 50,000 H200s, 30,000 GB200s, and 110,000 GB200s coming online soon. Elon Musk also said this, which I think is pretty funny. He says, quote, the signal to noise ratio in politics is terrible. I'm used to being in a maximally truth-seeking environment, and that's definitely not politics. I'm glad to be back in technology. That's Elon Musk basically telling you that people in politics, all they do is lie. The current head of compute at Anthropic, Corey Wang, says, quote, I don't think people have realized how much this new Waymo scaling laws paper is basically an admission that, quote, Waymo was wrong and Tesla was right. In contrast to Waymo, it's clear Tesla has now internalized the bitter lesson. They threw out their legacy AV software stack a few years ago, built a 10x larger training GPU cluster than Waymo, and have 1,000x more cars out on the road collecting training data today. Yeah, that was exactly right. I believe it was 2022, maybe early 2023, when Tesla completely threw out all of their code and retrained their software. That was the day everything changed for Tesla from an AI perspective. Sunday is the day we actually realized that from a market's perspective. And this Sunday is the moment that really hedge funds and institutions and analysts and everyone besides retail investors essentially have to start taking Robotaxi a little bit more seriously. Now, again, I've said it before and I'll say it again, the real question is, and the main driver of value for Tesla with Robotaxi is scalability. Like, if you have 10, 20 Robotaxis out on the road, nobody cares about that. Like, sure, that's a good first step. It shows proof of concept, proof of work, like you're actually doing it. That's great. But what's the scaling process look like? Do we have 5,000 Robotaxis out on the road next year in 10 different cities, 20 different cities? Do we have 30,000 out on the road in 15 or 20 different cities next year? Okay, those are the real questions that will inevitably drive the value in Tesla. Okay, so I don't know when we're going to get guidance around that. It could be earnings. It could be from a post on X by Elon. At some point, maybe this weekend or soon, I'm expecting further guidance on the roadmap ahead for Robotaxi. I know we're going to get that kind of guidance for sure on the next earnings, but I'm optimistic that it could come from like a post on X from Elon at any time. Now, in option activity today from hedge funds and institutions, you have 73 different trades totaling $24.12 million with a positive order value of 80%. So definitely a slower dollar amount today, but incredibly bullish. If you look at everyone, including retail investors, volume today is 61.21% calls, 38.79% puts. So definitely a heavy skew in the bullish direction today from a whole, and obviously from hedge funds and institutions as well. Just a smaller dollar amount, which again kind of makes sense given it's Friday, you're heading into the weekend. Like the fact that markets are not under more pressure, considering some of the Middle East drama and what we thought was going to be a strike on Iran this weekend, markets are actually doing pretty well today. Again, even yesterday, we just had a pretty hawkish Fed. Like Waller's comments today, in which we'll get into in just a moment, definitely sound good. It's a step in the right direction, but we did just have a pretty hawkish Fed. Keep that in mind. All things considered, markets actually are doing pretty well today. Now, a lot of unusual option activity, I would call it, for the July 17th expiration on Tesla. A lot of activity around this 350 call. You could see $226,000 trade here, $122,000 trade here, $157,000 trade here, $136,000 trade here. The price on these options is $1,100, almost $1,200. So the break even is really around 361, 362 or so. So that's a pretty bullish short-term trade for Tesla. That's expecting more than 10% upside from current prices by July 17th, which is less than a month away. I would say that's pretty bullish. And that's, again, just a break even, let alone like to actually make money on these. You're going to have to see more than a 10% upside from current levels. So definitely some hedge funds and institutions turning bullish on Tesla, which I would too if I was bearish on Tesla heading into the Robotaxi launch over this weekend. Now, short sellers today definitely reducing their short exposure in Tesla. You have 670,000 shares today that are being covered on. Again, that's kind of the trend that we've seen recently. Short sellers have been covering on short positions, and I think that's probably going to continue here. You have 2.74% short interest of free float, $24.73 billion sold short, and 76.8 million shares sold short. This was recently over 85 million shares sold short. So you have seen quite a bit of short sellers covering on short positions in just the last couple of weeks. And again, I think that's probably going to continue. Now, instead of just sharing all of the headlines from Fed Waller today, I think you get more value out of actually watching the clip. It is kind of long. It's like 7 minutes long. But I do think everyone needs to hear this because, again, I don't think it's just Waller coming out and sharing his views. I think Fed Waller was kind of sent out today by Powell to open up the door of optionality to cutting rates in July, because there was essentially a 0% chance of a rate cut in July. And I think Waller was sent out to open that door up as a possibility as long as things continue on the current trend that they are. So take a listen to this.
To bring in Fed Governor Christopher Waller. He is joining us this morning from Washington. Good morning, Governor Waller.
Good morning, Steve. Thanks for having me on.
Thanks for joining us. I just want to begin big debate, and you can see it in the outlook for rates from the Summer of Economic Projections. Where do you stand in this debate right now over how much concern we all should have over coming potential inflation from tariffs?
Steve, you know, as I've been saying for probably a year, I think the important thing for central banks to do is to look through tariff effects on inflation. This is a long-standing view going back 40, 50 years. So any tariff inflation we should see, and I've given various estimates that I don't think it's going to be that big. And we should just look through it in terms of setting policy and look at the kind of underlying trend of inflation. And right now, the data the last few months has been showing that trend inflation is looking pretty good, even on a 12-month basis. So I've labeled these good news rate cuts when if inflation comes down to target, we can actually bring rates down. I've been saying this since about November of 23. So I think we're in that position that we could do this and as early as July.
Do you think you could cut rates as early as July?
Well, I think that would be my view, whether the committee would go along with it or not. But I think we are in the position that the data's good. GDP growth is going to be near target, our long-run target in the first half of this year. Unemployment's at our long-run target. Inflation's running very close to target. Yet we're 125 to 150 basis points above where the median long-run neutral policy rate is. So I think we've got room to bring it down, and then we can kind of see what happens with inflation. If it got really bad and people got very nervous, you could just pause. But I think we're in a good spot right now for talking about bringing the rate down.
Would you want to begin a process of bringing rates down by 125 or 150 basis points now?
No, I think you'd want to start slow and bring them down just to make sure that there's no big surprises, but start the process. That's the key thing. We can start the process of bringing rates down, and then if there's some big shock due to maybe the Middle East conflict, we can pause. You know, we paused back in January. We've been on pause for 6 months to wait and see. And so far, the data has been fine. There hasn't been any reason to, in my view, I don't speak for the committee or the chair, but I don't think we need to wait much longer, because even if the tariffs come in later, the impacts are still the same. It should be a one-off level effect and not cause persistent inflation.
So let's talk about this, I guess, difference of opinion with some on the committee. Obviously, the SCP showed that the forecast showed that 7 members don't want to cut rates at all. What is the urgency right now in your mind to cut interest rates? Why wouldn't you want to just wait and see what happens with tariffs and inflation in the coming months before you started cutting interest rates?
Right. So we've been on pause for 6 months, thinking that there was going to be a big tariff shock to inflation. We haven't seen it. We follow the data. That is what we do. We look at the data, and we should be basing policy based on the data. And as I said, if you look forward to if you think this inflation is going to hit in August or September, it doesn't matter. It's the same impact. It's just a matter of timing. And I've been arguing since a year ago that central banks should be looking through this. This has been debated for 50 years in central banking, and the standard rule of thumb is you look through these types of price shocks. And that's what I think I'm arguing that's what we should do. And so if that's the case, start moving on cutting the policy rate.
How can you be so confident, Governor Waller, that a rise in prices from tariffs won't spill over into other prices and cause a broader inflation problem?
Correct. And I think this is a valid concern that my colleagues often have about the persistence increasing from this one-time price effect. And as I said, if you go back over the last 50 years, this was always the concern that central banks had when there was an exchange rate shock, an oil shock, a shock to the value-added tax. And the answer was, well, but the tariff's a one-time thing, or whatever the shock is. But then workers will try to increase their wage demands to make up for the higher prices. And that was always the source of the second round effects. But I just don't see that happening now. I gave a speech in Korea a couple of weeks ago where I laid out why I don't think this persistence will happen. Mainly the labor market's okay, but it's not strong like it was in 2022. So if you were to walk in today and you think inflation is going to be 6 or 7%, your employer is going to show you the door. They're not going to give you this huge wage increase to make up for tariffs that aren't even showing up yet. So I don't think that this wage mechanism is going to be around to cause these second round effects. And that's always the standard channel for generating persistence. I just don't think it's going to be there.
Do you have concerns now for the labor market? We just talked about the Philly Fed being negative unemployment. You've had this modest rise in jobless claims, and of course, something of a step down, along with recent revisions downward to the employment levels. Do you have concerns for the job market?
Yeah, I'm watching it. I mean, it's solid. It's been kind of amazing. The unemployment rate has stayed right around 4.2 to 4.3 for a year, just hardly moving. But we are starting to see things. Like if you look at there was a story in the Wall Street Journal earlier this week that the unemployment rate for new graduates is at a 20 or 25-year high. College graduates are not finding jobs. Their unemployment rate is 7%. In pre-pandemic, it was 5%. So it's that kind of data that's starting to make me a little worried. We're seeing job creation coming down. We're seeing a lot of things like you just said with the Philly Fed that are suggesting that maybe the labor market's starting to soften more than we might want it to. And so in my view, if you're starting to worry about the downside risk of the labor market, move now. Don't wait. People love to talk about long and variable lags. Why do we want to wait until we actually see it crash before we start cutting rates? So I'm all in favor of saying maybe we should start thinking about cutting the policy rate at the next meeting, because we don't want to wait till the job market tanks before we start cutting the policy rate.
Now, also in the news today, the Iranian foreign minister arrived at the Geneva venue for talks with European counterparts. Again, just to highlight one of the quotes that also hit the newswire today from Fed Waller, says, the Fed has been on pause for 6 months, waiting for an inflation shock that has not arrived. It's not going to. Waller is finally, I mean, he's been on the bullish side, but he's finally like publicly almost criticizing the Fed, right? Criticizing his colleagues, saying, you know, even seven of them don't want to cut rates at all this year. He's saying basically, what's wrong with you guys? Like, we're supposed to be data dependent, yet, you know, we're getting good data and you still don't want to cut rates. I kind of felt like it was a diss towards his colleagues. Correct me if I'm wrong, but that's what it felt like to me. It almost feels like Waller is the only adult in the room that is not letting politics or overly dramatic opinions affect policy, right? Waller seems to be the only adult in the room here. I think the rest of the Fed is probably compromised at this point, either intellectually or, well, for one reason or another. Let's leave it at that. The Wall Street Journal reports today that retailers are raising the bar for free delivery or eliminating the perk as they seek to mitigate tariff costs, which again, yeah, retailers, companies, like, you can't just pass on all the costs to consumers. So even then, tariffs are a one-time price increase. It's not going to be followed up by wages. I agree with what Waller said there. Like, that seems like common sense to me. Wall Street just sees things a little bit too, like, by the numbers. But if you actually know anyone in the real economy, like, people are not in a position to demand wages to go up, okay? They're just not. We're not going to see that. Now, what companies are going to be forced to do is, sure, maybe raise prices a little bit in some areas that you're able to, but for the most part, companies are going to have to find ways to raise margins internally to offset some of the tariffs, okay? Now, one way they can do that is implementing AI and actually laying people off. That's why I think tariffs could actually just be disinflationary or deflationary, because we now have AI. I mean, if you are someone that answers the phones for, you know, a company, let's call it, you can easily now be replaced. If that company is hit by tariffs for whatever reason, you're probably going to be replaced, dude. Like, that's why, again, you want to be investing in these great AI opportunities. That is what we are doing down below in the trading community. Link is in the description of this video if you guys want to join that. Again, I bought another company today. I don't know how this stock is trading where it is, how low it is relative to SoundHound or some of your other, you know, Big Bear AI, some of the other ones that people actually know about right now. I think it's only a matter of time before this one also blows up. Now, there was a new round of sanctions put on put on Iran today. This time, the Treasury Department targets entities procuring machinery for Iran. Now, head of FX research at Deutsche Bank says, quote, "The real story for the U.S. economy is the collapse in immigration, down more than 90% compared to the run rate of previous years, equivalent to a slowing in labor force growth of more than 2 million people." So again, Waller's the only adult in the room here because I think he understands this. I think it's pretty commonsensical. Okay? Yeah, we have a collapse in immigration. So what does that mean? Well, the unemployment rate could rise pretty aggressively if companies stop hiring just a little bit, because the total pool of workers is not growing nearly as fast as it was before. Now, some big news today as well. The U.S. prepares action targeting allies' chip plants in China. It's kind of weird how this headline reads when it comes across the newswire. Yay! But yeah, anything that has to do with semiconductors and taking action, typically not seen as a good thing. Nvidia down about 1% today. Now it says the U.S. prepares actions targeting allies' chip plants in China. Move as part of broader export control crackdown on tech to China. The U.S. seeks to revoke waivers for Samsung, SK, and TSMC that allow them to use U.S. tech in Chinese factories without case-by-case licenses. Now, in a Fed report today, the Fed reports it is still early to assess tariff impacts on the economy. They say the tariff impact is yet to show up in the official data. Again, because it's not going to. Financial stability is resilient and heightened uncertainty. The report says that current Fed policy is well positioned for what lies ahead. In early April, Treasury market was functioning remained orderly, but liquidity fell to levels last seen in early 2023. Look at this. This Fed report says liquidity materially deteriorated in equity, corporate bond, and municipal bond markets. They even reference equity liquidity started to dry up. Putin says that Russia and China see a clear way for a new world order. Putin says, "I believe there is resolution to be found for Iran-Israel conflict." Putin says Russia is not seeking mediation in the Israel-Iran conflict, but we have ideas. NVIDIA's CEO, Jensen Huang, says this is the decade of robotics and autonomous vehicles. I mean, let's be honest though, this is really the decade of AI. This is the decade of gene editing. This is the decade of innovations in healthcare. This is the decade of growth. This is not even just a decade. I think the next 30 plus years, AI, biopharmas, like gene editing. If you can't tell, I'm very bullish there. Mixed gene editing with AI potential, or just AI in healthcare in general. It's probably going to be one of the biggest disruptors that Wall Street is not seeing at this point. That's why I think there's a lot of hidden gems in even biopharmas right now, specifically ones that are implementing aspects of AI. Nonetheless, topic for a different video, topic for the trading community, probably not for this channel. But this is a trend that's going to continue for decades. We are in a Cold War, AI Cold War, with China in every aspect of the name. Healthcare, enterprise, software, robotics, AVs, autonomous vehicles. In every aspect, we are in an AI Cold War with China. That is a great thing. That will force America to innovate at speeds in which you would have otherwise not seen, which creates value for shareholders. Why do you think partially I'm so bullish right now? Putin says if Ukraine were to ever deploy a dirty bomb against Russia, it would likely be their final error. Basically saying we would take you off the map. Putin asked if Russia is unreliable by not helping Iran. Putin responded and says those who say such things are provocators, which is true. I mean, imagine if Russia started to help Iran. Like, y'all want to talk about World War III? Like, there you go. That's a damn good start. Putin says that Russia supports Iran's right for peaceful atom. Yeah, that's probably not going to go over well with the West. Putin says that Trump promised to support our legitimate demands over the safety of Bashar's staff in Iran. Let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, hit the like button and subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.